So we can honestly say with confidence that all the stock market bears are gone. They had one job. They had one simple job out there today, and they were accomplishing it for the majority of the day and then fizzled out completely. Good morning, ladies and gentlemen. Happy Saturday to you all. The Bulls are back. The party is going mad, and we are probably heading for all-time highs based on the reaction to PCE, no one caring about GDP, getting back above 524.38 that we talked about in the last two videos and the live stream, and the Bears completely have left town. They have packed up. They are packing their suitcases. They've said sayonara and adios. So it's going to be a fun one today. We're going to be talking about why the Bears are leaving, what happened on Friday, what happened with PCE, and why it doesn't matter. And we got something from JP Morgan talking about some stuff out there that we're going to cover and so much more. So without further ado, let's dive in. But before we do that, I do have a favor to ask of all of you. If you could hit the subscribe button and have bell notifications on, it helps the channel out and you'll know when we go live Tuesdays and Thursdays, 7 p.m. Eastern, for the live stream where we take your ticker requests, go over the news, cover company earnings, all that and more. But enough rambling about that. What happened today, right? Well, we can start off by looking at the 15-minute just to see kind of a judge of what happened, right? So recapping the day, we got going into the open, we were kind of like minutiae until the PCE numbers came out. So let's go look at the PCE numbers and see what they came in at. And it wasn't necessarily a big surprise. However, the month-over-month numbers did come in a little bit lower than previous. And I did mention this on the stream. So if you guys weren't there for that, make sure you catch the next one we go over stuff like this. Because it was, I said, they revised this higher, so it's the same like the GDP. GDP was 1.3, then they revised it to 1.6, came in at 1.3. Same thing with the core. It was 0.2 or 0.1, and they revised it to 0.3, and subsequently it came in lower. Not surprising. And as a result, the market basically said alley-oop and went to the 524.38 number, right? So we filled the gap essentially, or where we're going to open green. Market opens and then wham, just slam down into the noon hour, and noon hits and it's like, okay, market reversal time on no catalyst. This was a pure bullish move going into the close, and you can see the massive volume on the close. It was just bonkers. Everyone was buying. All the shorts were basically saying, hey, we're capitulating essentially, and then post-market kept pushing higher and higher and higher. The S&P closed 0.91 up. NASDAQ was actually down on the day, but if we jump over to the NASDAQ, right, going back to the daily chart real quick, the S&P, first of all, massive wick on the bottom, but NASDAQ was even crazier, right? Red day, yes. Weekly breakdown, yes, but you rotated off of the previous all-time high, meaning there is still chance right here for the Bulls to continue this momentum and the Bears to continue their capitulation. And they did capitulate indeed, ladies and gentlemen, which we have the receipts. Looking at the net speculative positions, we're almost back at dead even. They capitulated approximately 20,000 contracts. And if we look at the NASDAQ, we are now net short the NASDAQ. So this is where things start to get interesting. Did the Bulls really pack up and go out of town, or are they looking to rotate to a different machine to use as a catalyst? And we're going to be talking about what JP Morgan said, which will tie into this as well. And let's actually jump over to what he said, because it was bonkers crazy. How can you tell me it won't lead to stagflation? Jamie Dimon says extraordinary government spending has him bracing for higher inflation and unemployment. So again, he continues his streak of being a bear in a bull market. And the question is the guy completely crazy, or does he have a point? In a warning Jamie Dimon has issued before, previously saying he fears America is heading for a repeat of the 1970s. He mentioned this in an interview at MSNBC, that the 1972 era was fantastic. Everyone thought it was going up, and then subsequently in 1973, well, we all know what happened there, and it was a very rough time. Like he's saying here, everything felt great and then quickly turned around to be a period of high unemployment and inflation paired with low demand, as known as stagflation. Classical definition of stagflation, inflation being higher than GDP growth as we have now. Again, going back to the news, right? So if PCE is at 2.8, 2.7 respectively, then we can see this week when GDP came in, right, on a Thursday, GDP came in at 1.3%, meaning that this is classical definition of stagflation. He also went on to talk about how the bank sector more widely. Jamie Dimon said he and JP Morgan team are scenario planning, meaning if you think something is going to possibly happen, why would you not be planning for it? He also said we have a soft landing and rates stay where they are, come down a little bit, which is what the world expects. Everyone's fine, he said, talking about the soft landing. But he said in that same interview that his chances are more of like a 40% versus the market pricing in 70%. So it was a very fantastic interview. Make sure you guys go take a look at it. You can basically go and see that interview on Google. Just type in Jamie Dimon interview, MSNBC. Go watch it for yourself. It's a fantastic one. As you see here, he said more than half, 53%, said they were positive on the year ahead, while 39% were neutral, less than 10% were bearish. Again, so everyone's looking to that bullish side, similar to the 1970s, and we basically can go to the market to see, okay, NASDAQ had a weekly lower low, right? We closed lower than the previous week for the range. However, we also, on the S&P, have a weekly failed breakdown. So it's a tale of two indexes. We really aren't seeing necessarily like true bearishness where we advanced below the 524.38 pivot and basically went lower. We also can look at VIX as an indicator, right? So VIX slamming back down to that 1288 number that I've been highlighting for quite some time, which is that long-term running base, actually filling a gap from that push going from GDP and the PC numbers. And if we look at it as a whole, right, that's not necessarily good numbers. It's not giving the Fed what they want to keep rates lower. And also, if we look at yields actually went down because people are buying bonds. So they're not necessarily confident that everything is not going to hit the fan, but they're also not wanting to miss out on these higher rate yields, which have been paying safe haven. Essentially, it's a safe haven for storing wealth because they're at attractive rates that they're higher than inflation. So you're getting a real rate of return over this period. So people are saying, okay, I can go for a 1-year bond, right, paying 5.189%. If inflation by the metric is sub 3, I'm making 2% real rates on this, and therefore I'm actually making a profit on it. So again, looking at that as a holistic approach, that is definitely something that we have to keep in the back of our minds, that that's how we need to view yields, and how everyone, if yields drop, that's maybe one of the catalysts out there. But going back to the S&P, this means that we can get continuation further up, right? If we just say this isn't simple A to B pattern playing itself out to the upside, we can say, okay, A to B, expected move, coming back to that 550 number for the S&P, which would be extremely bullish. Similarly to the NASDAQ, if we see further rotation from the NASDAQ, we definitely could be setting up an A to B pattern on it as well, which we'll go over more of these levels in the weekend deep dive, guys. So make sure you guys are subscribed for that. But NASDAQ having a little bit less of an extension move, only up to 471. However, that would be a new all-time high and continuation of this rally after a massive rally in 2023. So we're going to keep you appraised of that. One thing I would like to note is the Russell was green for the past subsequent 3 days. So this could be rotation into small caps RSP as well, equating our S&P was green on today as well as yesterday. So, okay, we're seeing more of a rotationary period versus necessarily bearishness, right? So we look at Amazon, it was down today, Netflix was down, Tesla was down, AVGO was down significantly, so, and along with Nvidia, right? So chips are cooling off, especially with the news that they may be banned from selling to certain countries which are associated with China. And speaking of China, right, let's take a look at HSI. That does not look healthy in the slightest way, shape, or form. So you guys know I talk about this on the channel a lot, and I reference the net speculative positions for a reason. The pendulum is equal now. So each team has equal opportunity for the market to take money from them because there's no skewing of the size. Also, if we jump over to the fear and greed index, we can clearly see that we are in neutral territory, still staying at that neutral. It's not as fearful as it was yesterday, right? But we're still neutral. So anyone's game. So I know I was a little clickbaity with the title saying all the bears are gone, but they may be, right? They haven't really, based on this price movement, been able to capitalize on their move. I'm glad that they're maybe learning a little bit because they capitulated out of their net speculative position. So I'm like, okay, you're making the playing field equal. And the last time we were equal, we were at near all-time highs, right around here. And then we had the subsequent drop going into the second half of April. So again, is it going to be the sell in May type of mentality? The month has closed and we are still higher. So now is this going to be a traditional period where we kind of just trickle down lower? Or is this going to be another bull run completing that A to B pattern on the way up? Make sure you guys throw it in the comment section below of what you think. And we can actually go to one thing to tell us what it could be, right? Well, there is the indicator that I like to say, Bitcoin is the risk on, risk off mentality. I said in the stream that Bitcoin is bearish just because I'm seeing basically a broadening wedge in Bitcoin, right? So if we just draw it out like this, we can clearly see that there is a broadening wedge in Bitcoin, which is traditionally a bearish signification. Now, one of the things that I will point out that this is a pile being built right here, which basically means once we break that range, we're going to have a pretty massive move as we saw in subsequent moves in Bitcoin. So if we break to the upside, we invalidated this pattern. Congratulations. We run Bitcoin up, risk on mentality comes back into the market and, YOLO. But again, if we continue this pattern, then we're looking at breaking the 50, coming down lower, and coming down to a new low for Bitcoin coming around that $51,000 mark, which would be a significant mental cut for a lot of these companies. And again, is it going to signify that this is now rotation, or is this setting up to be something more? We're going to dive more into that in the weekend deep dive. So make sure you guys stay tuned for that video tomorrow. And thank you all so much for watching today. I hope to see you in the next one.